All right, welcome. I know we only have like literally 2 minutes. I'm scrambling to play something. I don't even know if I will, to be honest, but let's quickly take a look at stuff. Honestly, this isn't really like for today. This is more for like the rest of the week. But we can still look at stuff for today really quick. I just want to see CRL if there's anything. I mean, I got to take something there. I'm going to take a CRL strangle if I have time. Shit. By the 140p. I'm not going to get this in time. Yeah, it's not going to fill in time. And I don't feel like messing with it. CRL, what was the other one? 185. I got the 140. I paid too much for it probably. 180. I'm going to do the 180. If it'll give it to me. The 180 and the 140. All right, I got the CRL strangle. That's all I wanted. Okay. All right, so I got a CRL strangle. Pretty interesting volume over open interest here in CRL today. This is a really good mover on earnings. It is a consistent mover over 10%, 5 quarters out of the last 8. So not bad. Wingstop has very similar metrics to CRL. I just kind of liked the CRL put and call contract setup a little bit more personally. But Wing would have been a really good strangle as well. I like to see more volume over open interest on some of these chains, and that's kind of what draws me into a play. But Wingstop would definitely be a good one, although that is reporting tomorrow morning. So if you didn't take it today or in the last 60 seconds, then you didn't get it, but that's okay. There are endless opportunities in the market, especially with earnings. So if you don't take something or you fade, like especially this week, if you fade this week out of fear because it's OPEX week or something, I personally think it's going to be the highest OPEX expiration. That'll just incrementally get higher and higher and higher as more people get drawn into the market. But I think this week is going to be very flat personally. I'm expecting a lot of chop. So the only things I'm kind of doing are just very small earning strangles. So the CRL strangle I got in last minute. And then while we're here and the market's closed, so we obviously can't do anything for the rest of today, we might as well look at the rest of the week. So here are your top candidates for earnings movers today. Actually, let's start with the pick'em. I did not place I think PanW. Palo Alto was the first option to bet on for pick'ems. But I don't like PanW. To be honest, I kind of feel something about Dash. Only looks like there's $100 on down. So I'm gonna I'll do a 500 on down for Dash. Wayfair, I think Wayfair popped really big last earnings. Maybe it was like a 15% move or something like that. So we'll go down on Wayfair too. I'll just put $1,000 out there. Carvana, I can't stand Carvana, so I'll just stick with those two. Place my bets for earnings, lottos, pick'em. We can look at the leaderboard, who's winning. Looks like Timbo Flip 107 is doing quite well. So congrats to Timbo Flip. I am not doing well, 11th place, but that's okay. Anyways, back to the deep dive calendar. So here are your top candidates for strangles this week. As far as earnings go, you have Carvana. You have, which is tomorrow after market, so we still have time for that one. Wingstop is tomorrow morning, so if you didn't get in that, like I said earlier, then we missed it, but that's okay. I'm okay fading it. If it pops or drops big, then congrats to people who are in it, but I won't feel any FOMO there. ACAM or Akami Technologies, however you pronounce that, that is later this week, Thursday after market. This is like a kryptonite stock for me for some reason, and whenever I get it, it chops. So you guys will know if I get it, and if I do get it, it'll chop. But anyways, Lemonade is another good one. CRL, and Lemonade is Thursday before market, so In order to get into that one, we'll have to do it tomorrow afternoon. CRL, Charles River Laboratories, that is tomorrow morning. That's the strangle I just got last minute. Might have overpaid for it, but we'll see what happens. And then Avis Budget or CAR wins tomorrow after market. So those are your 6 top candidates for strangles as far as kind of like the more expensive blue chip stocks go. If you're into the cheapies, no judgment there. That's why I put together this little section for you. So we have AXT Inc. They are a 5 over or 5 out of 8 mover. Rally Fiverr, which reports tomorrow morning, and I think I shared sides for that. I believe it was the 14 call 13p, so pretty close together, but maybe with some pins movement last week, maybe that has something to do with what Fiverr will do, or maybe it'll just react off of AI kind of taking over all those freelancer jobs. Who knows? I'm not in it. I don't really care for anything that's cheaper than like cheaper than $50 a share. LegalZoom, Thursday after market, maybe some slight interest there. Hecla Mining, that's today after market, also reporting with SSRM, another miner, and then we have Upbound Group. I can't go out of my way to recommend any of these 6 here, but again, if you like the cheaper ones and you want to play something on earnings, then this is the section for you to look at. So we will take a look at, since we can't do anything with the Tuesday afternoon or the Wednesday morning stocks, we'll look at the Wednesday afternoon, what we have there. Still some good opportunities. Next week has much better opportunities. This week has OPEX, and we had a market holiday on Monday. So typically when a market holiday happens during a week and OPEX tends to fall in the same week, it's going to be a very boring, sideways, choppy week. So that's what I'm anticipating this week. That's why I'm not going too heavy with my trades or earnings trades. But we have Carvana, CAR. Those are your 2 ESS or your earnings super spicy plays. So if you want to be very conservative with your earnings money, but you still want to play something, these are your 2 options, Carvana or CAR. And then we have Rally, C1, DoorDash, Royal Gold, Cheesecake Factory, Figma. That one's tomorrow. Hormel Foods, not a good mover. We'll look at Figma just because it really doesn't have that many quarters to report. I think it's only reported 2 quarters thus far, maybe 1 or 2. So take these these moves over 10% with kind of a grain of salt when it comes to Fig or any stocks that are relatively newly IPO'd and they don't have a lot of reporting history. Take this with a grain of salt. I'll work something in that kind of denotes or signifies that this is a newly IPO'd stock. But for now, since most of you know Fig or Figma, I would imagine most people know Figma, the stock. Just know that this is 1 quarter. I want to say it's reported 2 quarters so far. So honestly, not bad in terms of a trade. It is a cheaper stock. It's like the $23 range. So if you're into those cheaper stocks, then Figma might be a good mover. Personally, for me, I don't have shares of this. I didn't get shares during the IPO. I think I bought puts during the IPO and made a little bit then, but I haven't traded it much since. So I'll probably fade it. I'm kind of curious to see what their numbers are. I think I saw today that Figma did have some sort of partnership or some sort of something with Anthropic, who makes Claude AI. So that's interesting there. But for me personally, nothing really stands out fundamentally or technically. We can look at maybe Cheesecake, just because that's kind of a household name. Cheesecake Factory. Some weird interest there. I don't like these contract prices though. This volume over open interest with this contract price kind of implies to me that the 55 put is probably being sold on the bid. But I don't really know that for sure. But just looking at these, I would say avoid. We can look at DoorDash. I'm kind of curious about that one since I just placed EL Bucks on it. Looks like there is some interest in the 200 call. This contract price implies to me that they were probably sold on the bid. So remember, if it's a cheaper contract and you see a lot of volume over open interest, they're probably being sold, especially if it's out of the money. So current DoorDash price was 162. So that's more than like a 10% move, 20. So it's almost like a 20+% move to get to 200 call. Yeah, 20. It tells you right there. 20. I'm stupid. 23% move to get to the 200 from where we are right now. So that's a little too ambitious for me. So I think these are sold. I would lean to the downside on Dash. But it doesn't have that many moves over 10% in the last 2 years. So definitely not a guaranteed must play, but could be interesting. Nothing really else stands up. We'll look at, I think we already looked at Carvana. Carvana does, so, I mean, it's a great earnings mover, right? 7 out of the last 8 quarters, it's gone over 10%, either up or down. If you want to play one stock this week, Carvana, or one earning stock this week, Carvana is probably the call. But keep in mind, a 10% move off of 350 is $35. So you're looking at like the 380 call, 380-ish, 385. And you're probably looking at like the 320 or like 315 put. You're going to pay up for those. So there it is, the 380 call right here. It's almost 10% out of the money. It says it's 8.2% out of the money. You're going to pay $15 a so $1,500 for one contract for the 380 call. On the other side, adversely, you're gonna spend, what is it, like almost $900 for the 300 put, and that's 14% out of the money. So if you went 10% out of the money, you're probably looking at a contract that's around $12, $13 on the put side. If you have a portfolio that can manage trades like this, these contract prices, and like I said, you want to play something earnings related, Carvana is your best bet. And Carvana makes sense for paying up. It makes sense for paying up because 7 out of the last 8 quarters, it's gone over 10% in either way. So what that means is you don't want to look at that number and go, well, I can't afford a 380 call, but it is a good mover, so I'm going to buy like the 420 call. You don't want to think that way. The way to think about this is if it can consistently hit 10%, and I can afford a contract that's within 10% either way, that's the contract to buy. So Carvana, I would say if you play it, the only contracts worth playing are those that are within 10 to 12% of the current strike price. So you're going to spend a lot for Carvana. I will consider it. I'll try to get on a little earlier tomorrow to talk about it and kind of like look at some of the flow and what we're picking up, what Earnings Ladders is picking up as far as volume over OI on some contracts, but keep it on your radar for now. Avis or CAR, another kind of interesting one, but to me, it's not a must play. If I see something interesting as far as volume over OI, then maybe, but right now nothing really stands out a ton. It looks like there is interest for the 128 call and the 116P. The 128 is about 5% out of the money, and the 116 is about another 5% out of the money. So we'll see. We'll monitor that one closely, but right now I'm not really into it. But like I said, CAR and Carvana, those are the ones to watch tomorrow. So those are the ones I will be watching closely. We can look at maybe Thursday morning. So Thursday morning, again, not much going on this week, not many reporting. So play very, very, very light or don't play at all is what I would suggest. Lemonade is a pretty good mover. 5 out of 8 quarters, it's gone over 10% up or down. It's kind of a cheaper stock. It's not over that $100 range. It's like 64, 65. So a 10% move in either direction would take it to like 71 or maybe just below 60 in like the 59 range. And that's kind of what we're seeing as far as the high liquidity contracts. This to me, the 50p, buying these at 70 cents and this volume over OI, I don't know if those are sold or if they're just kind of very ambitious out of the money puts. But 22% out of the money is pretty far out of the money. And And I kind of do like this $3 contract. I like the fact that it's got almost more than half volume over half the open interest as far as volume goes. So I would lean to the upside on Lemonade, but it's been sliding the past few weeks. So we'll see, but I would lean to the call side on Lemonade. Again, not a must play, but it is one that's worth it. Keep it on your radar. ULS, I don't know anything about this company. It looks like they are a industrial type company. I don't like industrial or energy companies myself as far as earnings go. This one looks like 4 out of the last 8 quarters it's gone over 10% up or down, so decent, but like not good, not great. Nothing exciting about this options flow, so just gonna click out of that one and pass. Nice, this is an interesting one. It's a tech company. Not a fantastic mover, not even really a great mover, maybe like a decent. 3 out of the last 8 quarters it's gone over 10%. Has been diving. That's kind of interesting. Just almost straight down since like beginning of February. So it looks like, the 80 put has interest. That's 16% out of the money. That's really not really far out of the money, but it's decently far out of the money. The 120 call has interest. I don't like these contract prices. I guess maybe just because there's more volume over OI on the put, I would lean to the put side and kind of keep an eye on it. But nice. I have no fundamental feelings about it or technical really, other than right now just the 80 put has a little bit more interest on it or volume over open interest from today. So I guess I would lean towards the put. Also 80 is a cool number too. Shout out Jerry Rice. Yeti Holdings, kind of a cheaper stock. Kind of a disappointing earnings stock, to be completely honest. 4 out of the last 8 quarters, it's gone over 10% up or down. I don't have any personal feelings on Yeti. I kind of feel like the company itself is way overvalued at this point. Like people were into those big like thermoses and everything, the Yeti coolers and everything. But I kind of feel like that hype has died down. Maybe I'm wrong, but $48 for Yeti seems a little too pricey, but that's just me. What do I know? Nothing when it comes to stock valuation. So Yeti, we have Wayfair, Wayfair, which made a pretty big move up last quarter. And that's why. So four of the last 8 quarters, it's gone up or down on earnings, 10%. But last quarter, it did see a 15% or more move, and the quarter before was under a 15% move, so it does get a minus for that. We kind of see those as one-offs or a fluke. If a stock goes 15% in either direction last quarter and also did that the quarter before, then we see that as a potential trend, and that would actually give a boost to its score. But in this case, Wayfair popped last quarter and went flat or didn't pop as much or drop as much the quarter before. So it gets kind of like a degradation for maybe it was a fluke move last quarter. So to me, I'm going to fade Wayfair, but there's interest, as you can see. The 91 call has some good interest, volume over open interest. The put also same kind of thing, and those contracts are pretty well priced. So I would keep an eye on those 2 strikes with Wayfair. These are probably bought because of the contract price, but you can't tell without actually opening up something like Unusual Whales. But just purely using earningslottos.com, I would say these are probably bought, and to kind of put a pin into Wayfair, keep an eye on it. It's also an ESS play at Earnings Super Spicy, so it's one worth watching as far as earnings go this week. We have Upbound, which I don't know much about. It looks like they are kind of like a fintech, rent-a-center. Oh, they do Rent-A-Center? I don't know if they do Rent-A-Center. I don't really know. Maybe they own Rent-A-Center, which I'm not quite sure of. But Upbound, that is a stock that's reporting earnings this week. It's too cheap for me to consider, and I hate these contract prices. I prefer spending anywhere between like $1 and like $3 for an earnings lotto, but that's just me. We have So That Was Upbound. We have Etsy, which is interesting. Pinterest, it kind of always falls in the same category as Pins or Pinterest for me. I don't know why. I know that they are two different websites. They kind of are focused on two different things, but Pinterest tanked last week, so maybe there's juice to that. There's juice to the Etsy downside this week. Nothing on the contracts is really standing out right now, though. So probably a fade for me. But if I see some crazy or weird put activity, maybe. But probably a fade for now. Garrett Motion, that's too cheap, like $20 a share, too cheap for me to look at, really. And then I'm not really interested in any of these stocks down here that haven't gone over 10% up or down in the last 2 years. So no real interest in any of these, PWR, Quanta. I will say that VRT, so Vertiv Holdings, which I think it popped like 20% last week, that one did have it was one move over the last 8 quarters. It's gone over 10% up or down. So not saying that none of these 1 and 0 out of 8 stocks can't move. They can. If you know something, if you have high conviction. I know there was a lot of people with high conviction and VRT calls last week. And congrats to you if you had them. If you have high conviction in something like that, then play it. Otherwise, if you're looking for an opportunity, I would recommend not focusing on any of these 0 out of 8, 1 out of 8 moves. So Walmart, poop. I would not trade Walmart at all on earnings. I couldn't care less about anything that Walmart's going on. Terrible move on earnings. So that was, what was that, Thursday pre-market. Here's Thursday aftermarket now. So we'll time travel, pretend like we are Thursday midday, and we're looking for opportunities for Thursday afternoon. ACAM is the first one. Like I said, I don't know why I have such bad juju with this stock, but I do. Every time I trade it, it either doesn't move or it moves the opposite direction that I thought it was. That chart looks pretty strong. I think they are involved in like cybersecurity, data network. Yeah, I think we're investing more securely as one of servers. Okay, so they're like it's like cloud, security and cloud computing, cloud security type stuff. So fundamentally, they're in kind of an interesting space for sure. Technically speaking, it does move well on earnings, but like I said, every time I play it, for some reason, it doesn't. So maybe I just got unlucky and I traded it 2 quarters out of the last 8 that it didn't move, but whatever. Really nice share float, 140 million. That's pretty small. Not getting a boost for that. The share price is great. I love that like over 100 share price. That just makes it easy, right? A 10% move up or down is $10 either way. So you're looking at like the 110. What are we at right now? Yeah, 108. So you're looking at like the 118, 120 call. And then maybe like just below the 100p, maybe like a 99, 98, or even the 100p if you want to keep it safe. We'll see what's coming in as far as options flow. The 110 call is getting a lot of attention so far, and the 85p also. This contract price tells me that these are probably sold. So I like the 110, or I think that's too close to the money on ACAM. I think you could probably go to the 115 or like a 120, even a 120 call with ACAM. So I like the upside there, but like I said, I just have bad luck with this one personally, so I don't know if I'll play it or not. But it is a earnings super spicy play, so it is a consideration for sure. AXT Inc. Don't know much about this stock at all. Looks like they're involved in semiconductors, so hot sector, or kind of a semi-hot sector, no pun intended. But I don't like the share price. $23 a share is pretty cheap, and a 10% move in either way is like $2. So I don't like those type of plays, but again, like I said, they can move given the right opportunity or the right environments. 5 out of the last 8 quarters, this one AXTI has moved up or down 10%, so pretty good. 51 million shares, really small float there. Chart, meh, nothing really standing out. The options flow, nothing really standing out for me there. I think that 30 is way too out of the money. And probably the 17.5p, probably way out of the money too. So I would say off the bat, the majority of the volume on both of these, or the majority of the OI is probably sold, but I don't know that for sure, and I don't really care to know because I don't know anything about the company, and I probably won't trade it. So AXTI, but it's there in case we do pick up something interesting. We will show it on the website. SFM, Sprouts Farmers Market, an interesting play. I think the last time I remember looking at this, it was like closer to 100. Might have been over 100. So 67, that's kind of low for me seeing it that. 5 out of the last 8 quarters, it's made a 10% move up or down. It does get a degradation or a subtraction because it did pop last quarter. I think it dropped. I think it was a more than 50% drop last quarter. Either way, it did not do the same type of thing the quarter before. So it's going to get a minus or it's going to get a subtraction on that. But it's got a really good share float. Tiny, 96 million shares. So it's going to get a plus for that. It's one to watch, but not one that I am convinced that I'll play or trade. And we'll probably see more options activity on these the closer we get to earnings. So probably like Thursday during the day, there'll be these call and put. They'll look different. The strike prices might be different. It might be the same, and we'll just have more volume. But we'll have to see. But yeah, SFM, a decent play. Keep an eye on it. Open Door, really, really, really cheap. $4 stock. I have no interest in playing this at all. It's got a pretty big share float. I'm not quite sure if people know how big the float is for Open, but like 808 million shares is a pretty thick float. And that's probably why it's such a cheap stock, because it is kind of difficult to move the price up or down. So Open, I have no interest on it. No interest in either of these. I don't like this at all. I'm not a DJ when it comes to that kind of stuff, so I'm not going to play Open. Celsius, kind of a little interest on Celsius. What's it trading at right now? Like $44. I kind of feel like that's fair value for Celsius. I might have to throw in a price to earnings number on these because I think that might be helpful. But yeah, this might be fair value for Celsius right now. I'm not quite sure. I have a little bit of interest in Celsius, but not a whole ton. I would rather focus on things like SFM or ACAM or Carvana or Car, Lemonade, Wayfair. I would prioritize my focus on those before I look at something like Celsius. But if you are an avid energy drinker and you like Celsius, then maybe you know something I don't know. But Celsius is a stock reporting, kind of decent, not good or great. LegalZoom, too cheap, 686. Don't really see anything there that's interesting or pops up, so too cheap. This one is interesting, Fix Comfort Systems. So it's definitely a pricier share price, which is kind of good, kind of detrimental. So it's good because a 10% move is pretty big. It's like a $140 move up or down. But the contract prices are going to be a little pricier than you would normally be accustomed to. So think like the contract prices for something like Booking.com or something like that. Not a good, not a great earnings mover. 4 out of the last 8 quarters, it's gone up or down 10%. I think it did really well last quarter, which is probably why people are being drawn to it now. But nothing really pops out to me as far as options flow. And this isn't a must play. So this is one, I would say, because this is like a dicey one. 4 out of the last 8 quarters, it's kind of, I would say it's up to you to strangle this one. But you would be okay picking one side, I think. I would probably strangle it just to be safe. If this was a stock that maybe is a 3 out of 8 mover or a 2 out of 8 mover, then I would say don't strangle that. Probably just pick one side and lean to that side. Unless if it can prove that it consistently moves over 10%, then I'll definitely strangle it. This one I'm kind of on the fence about. So trader's discretion on that as far as whether or not you strangle it or just go one side on fix. But it's a good opportunity. Good, not great. Keep an eye on it for sure. Ring Central is interesting. It's like a virtual telephone service. A lot of call centers use Ring. Ring Central. It's kind of like similar to Five9. Pretty much same type of company. This is interesting. We have volume over open interest on the 3150 call, and it's not even 10% out of the money. It's like a little over 8% out of the money. And these contract prices tell me that they're probably bought. So keep an eye on RNG or Ring Central. Keep an eye on the 3150 call or just calls in general. Interesting there. But only 2 moves out of over 10% over the last 8 quarters. So not one to strangle, one to just kind of go one side. Live Nation Entertainment, the concert promoter and kind of ticketing thing. LYV, not a strong mover at all. Only one time in the last 2 years they've gone over 10% in an earnings reaction. So I would probably fade this one, but there is some interesting volume for the 160 call. I would fade it. I don't really see anything there personally. Dropbox, probably a little too cheap for my liking and nothing standing out right now anyways as far as options flow goes. So probably fade that one too. But if something pops up, then we will notice it. But that's pretty much all that's going on this week. There's really not that many reporting because we have options expiration this Friday, and I believe VIX expiration is tomorrow, but don't quote me on that. Not completely sure. So there we have it for today. I'll try to do these more often. I really want to get in the habit of doing them Monday nights, or maybe just Monday power hour and then leaking into close just to talk about the rest of the week stocks. But let me know if this is helpful for you. If you like these kind of rundowns or looks, if you like the 3:30 to 4 o'clock streams, I really enjoy doing those. It's just whether or not I can get home in time from work and the gym in order to do them. But I love looking at this data and sharing it, and I hope it's been helpful for people or working. So good luck this week. If you don't know what to trade as far as earnings go, look at the pepper icons on the website. And if you still can't make up your mind, then do not trade anything this week as far as earnings. That would be my suggestion. Next week, we have much better opportunities. We don't have OPEX, and we don't have a federal holiday. So better things than this week. But I'll wrap that up and just say good luck and make some money off of Earnings Banger. Talk to you later, guys.